Your bills show up every week, so why does your portfolio pay you once a quarter? That's what I'm building in this video, a weekly income system using 12 high-yield dividend stocks, each one timed to pay you during a different week of the month. I'll walk you and John through why each one earns its place in the lineup, how they complement each other, and how the timing of their payouts keeps the cash flowing every week. In the end, I'll show you how this portfolio and strategy can pay on average $300 to $400 from the first week. Let's start by talking about why this strategy makes so much sense in today's economy and why dividend investing is more powerful now than it's ever been. Okay, so before we jump into the actual stocks, let's take a second to talk about what's actually going on in the economy right now and why dividends matter more than ever. Let's be real, prices are high. Groceries, gas, rent, it all adds up. Inflation hasn't just disappeared, and even though interest rates have shot up, they're not exactly helping the average person save or borrow. On top of that, global tensions are back in the spotlight. New trade wars, tariff easing, but still there are threats and political uncertainty. It's no wonder that markets feel like they're swinging every other day. People are looking for something steady, but all they're getting is chaos. And that's where dividend investing really starts to shine. Because at its core, it's pretty straightforward. You buy into companies that literally pay you to hold their stock. That's it. No wild trading, no timing the market, no sweating over daily stock charts. You just hold and get paid. And here's the key, that income doesn't rely on the market going up. It just depends on owning the right companies. And what makes it even better is consistency. While those flashy growth stocks go up one week and crash the next, dividend-paying companies are usually more stable. They're not chasing headlines. They're built on habits, like reliably sending out checks to their shareholders quarter after quarter, year after year. The problem is that with all of life's responsibilities, not everyone can live from quarter to quarter, waiting on those quarterly earnings. But here's the part that surprises most people. With the right mix of dividend stocks, you can actually structure those payments to hit your account every single week. Not once a quarter, not once a month, weekly, like a paycheck. And that changes everything. Suddenly, you've got a rhythm, a cash flow system, something that feels steady even when the market is spinning like a top. Now, not all dividend stocks are worth your money. A high yield might look great on paper, but if the company's built on shaky ground, it won't last. You want the ones with strong foundations, real businesses, real cash flow. Of course, chasing weekly stocks means you'll be exposed to some level of risk. The good news, I've done all the digging, so let me walk you through how to build that kind of weekly dividend income step by step. Instead of just buying one or two stocks that toss you a check every few months, we're doing something smarter. We're building a rotation, a lineup of 12 solid high-yield dividend stocks. But here's the trick. Each one pays out at a different time during the month. That way, every single week, something is hitting your account. Think of it like a smooth baton pass in a relay race. One stock pays you, the next one takes over the following week, then the next, on and on. It's steady, it's predictable, and it turns your portfolio into a weekly income machine. No more waiting around for that one quarterly payout. This way, your money shows up like clockwork every single week. But I'm not just picking random stocks with high yields. Every name on this list checks three important boxes: strong dividend yield, financial health, and industry variety. That last one's a big deal because if one sector slows down, others keep the income flowing. It's like having backup generators in different parts of your portfolio. This isn't about chasing hype. It's about building something that lasts, something that keeps paying you whether the market's booming or barely crawling. And the best part? You don't need to be glued to your phone or constantly watching the market. This system runs in the background. Once it's set up, it just works. Your only job? Follow the plan and let the payouts come in. And as they do, you can even reinvest them, growing your income stream little by little without adding more money out of your own pocket, or simply use them for your expenses. So let's jump into the first batch of stocks, the ones that kick off your income stream every quarter: January, April, July, and October. Each stock is placed in a specific week to keep your income steady and uninterrupted. Let's start with Week 1, Conwest Associates LP Units with the ticker symbol CWPS, which comes in with a powerful yield of 13.17%. CWPS isn't just about a big percentage, it's also about consistent performance. It starts your quarter strong. This stock delivers its payout early in the month, setting the tone for reliable income right out of the gate. In Week 2, Brandywine Realty Trust with the ticker symbol BDN has a dividend yield of 14.93%. It's a real estate investment trust that has a long history of paying solid dividends. Mid-month can often feel like a quiet stretch, but BDN fills that gap with a dependable deposit. You stay on track with zero downtime between payouts. Next is Week 3, Office Properties Income Trust with the ticker symbol OPI offering a dividend yield of 17.28%. OPI focuses on office properties. Despite the sector's challenges, it maintained its distributions and held firm. That kind of consistency is key to making this whole system work, especially in an environment where surprises are common. And finally, we close the month with Week 4, Two Harbors Investment Corp. with a ticker symbol TWO, which boasts the highest yield in this group at 15.46%. TWO operates in the mortgage space and is known for delivering one of the most generous payouts among high-yield dividend stocks. Now, here's what makes this whole setup so effective. Each of these stocks pays quarterly, but because they're spread out across different weeks, you're not just getting paid every few months, you're getting something every week. Then you repeat the cycle again in April, July, and October. And there's a nice layer of protection built in too. BDN and OPI give you exposure to commercial real estate, while CWPS brings in preferred shares, and TWO adds a mortgage-backed angle. So even if one area takes a hit, the others help smooth things out. Now remember, in the end, I'll explain how these stocks with the rest of the portfolio and strategy are capable of paying out an average of $300 to $400 right from the beginning. So let's keep going, because the next set of months, February, May, August, and November, are just as important to keeping that weekly cash flow alive. These aren't usually seen as major dividend months, but in this rotation they play an equally important role. The second group of stocks keeps the weekly payouts moving without missing a beat. We kick off Week 1 with Angel Oak Mortgage REIT with the ticker symbol AOMR. It's not flashy, and honestly, it doesn't need to be. AOMR focuses on real estate-backed mortgage assets and delivers a solid 13.09% yield. What it brings to the table is stability. It just does the job, pays consistently without drama, and that's exactly what you want when you're aiming for predictable cash flow. Moving into Week 2, TXO Partners takes over. That's TXO on the ticker, and it pays a 12.84% yield. TXO is part of the oil and gas world, and while that sector can move with the market, well-run companies in this space are usually strong cash machines. TXO adds that dependable energy income while also giving your portfolio some fresh legs beyond real estate. Week 3 is where Flex LNG comes in, ticker FLNG, with a yield of 11.98%. This company is in the business of liquefied natural gas shipping. Sounds niche, but here's why it matters. Global energy demand keeps rising, and LNG is a big part of meeting it. FLNG gives your strategy some international exposure and taps into long-term global trends. Then, to round out the month, we've got Alliance Resource Partners, ARLP, closing Week 4 with a 9.8% yield. This one's in the coal and broader energy sector. Now, coal might not be the buzziest investment out there, but ARLP has a strong record of paying dividends, and in this system, that reliability is what counts. It's not about hype. It's about income that shows up when you expect it. This group also improves balance. With energy, shipping, and real assets now in play, the portfolio isn't relying too heavily on one type of business. If one sector slips, others help keep the income going. That balance is key to keeping the system running through different market conditions. Now, most of these companies also offer dividend reinvestment plans, also known as DRIPs, which allow dividends to be reinvested into more shares automatically. It's an easy way to increase income over time without needing to add more capital. With every reinvestment, the future payouts grow a little more. Now the final stretch of the year, March, June, September, and December, completing the 12-stock dividend system. These last 4 companies round out the rotation, filling in the remaining weeks and locking in a full year of consistent income. We kick things off in week 1 with Direction Daily MSCI Emerging Markets ex-China Bull 2 times shares ETF, ticker XXCH. Yeah, it's a bit of a mouthful, but what you need to know is that it brings an 11.09% yield and a surprising amount of consistency for something that sounds a bit exotic. It picks up the income rhythm right where the previous month leaves off and keeps the weekly cash flow rolling without a hitch. Then in week 2, we've got Sonic Shares Global Shipping ETF with the ticker symbol BOAT, BOAT. And this one, it brings in a hefty 13.27% yield, one of the highest in the entire system. BOAT is all about marine transport and global trade. It keeps the momentum high mid-month, providing strong income and adding further exposure to the logistics sector. Week 3 is where International Seaways with the ticker symbol INSW comes in. This company focuses on transporting crude oil and refined petroleum products. Its yield, 7.85%. But the real story here is the reliability. Energy transport may not make headlines every day, but the demand doesn't stop, and neither do INSW's payouts. It plugs perfectly into the 3rd week of each of these months, keeping your momentum strong right through the middle. Finally, Scion Investment Corporation, with the ticker symbol CION, rounds things out in week 4, paying a hefty 14.26% yield. As a business development company, it lends capital to mid-sized firms, earning strong returns and passing them on to shareholders. Scion consistently lands among the highest yielders in this system and serves as a strong close to the monthly income cycle. XXCH and BOAT handle the front end of the month, keeping the early momentum alive, while INSW and Scion finish strong with heavy-hitting yields and industry diversification. Together, they bring exposure to shipping, energy, and mid-market finance sectors with strong, proven dividend histories. Now that we've got all 12 stocks locked in and flowing across the calendar, the big picture comes into focus. Each of the 12 stocks is selected not only for its dividend strength, but also for when it pays. That timing is what turns a handful of quarterly payers into a weekly income machine. So let's break it down and take a closer look at how those dividends land week by week across the entire year. All in all, which stocks will pay you in which month? For this portfolio, it should actually look something like this. Since we know what each stock pays in dividends, it should look something like this. And now that your dividend calendar is complete, it's time to talk about making it real. How do you actually put this strategy into motion? The first step is deciding how much you want to invest. If you're aiming for the full 12-stock setup, a solid starting point is $120,000, split evenly. That's $10,000 into each stock. This approach helps keep your portfolio balanced and make sure no single company holds too much power over your weekly cash flow. But you don't need that much to get started. Even with just a few $1,000s, you can begin building your income machine. Start with a handful of stocks, focus on one payout group, and scale from there. And you can reach the same goal in 3 to 5 years. The system is flexible. What matters most is just getting started. To keep things simple, for our example, I'm taking the $10,000 in each stock approach. One important detail to watch for: the ex-dividend date. This is the cutoff for receiving the next payout. If you own the stock before this date, you're in. If you buy after, you'll have to wait until the next round. So keep an eye on those dates. Keeping a simple calendar or reminder system can help you stay on track. Also, if you really want to watch your income grow over time, think about reinvesting those dividends. Many of those companies offer DRIPs, or dividend reinvestment plans, which automatically use your payouts to buy more shares, which in turn pay higher dividends. This strategy doesn't ask much from you after setup. There's no need to stare at the charts, chase news headlines, or time the market. Once it's built, it just runs while you go about your life. Now, the big question that everyone's thinking, what kind of money can you actually expect to make from this? What are the real numbers behind the weekly income? Let's run through it. If the plan's been followed, around $120,000 split evenly across the 12 Dividend stocks, that's $10,000 per company. No day trading, no chasing headlines, just a steady, well-timed system built for income. Here's how it plays out. In week 1, you're looking at an income stream of about $277 to $329 depending on the month. Some months hit harder than others, but the floor stays solid. For example, you'll collect $329 in January, April, July, and October. In March, June, September, and December, it's around $277, and for the rest, February, May, August, and November, it holds at $327. Week 2 follows up with similar consistency, ranging from $321 to $373. It peaks in months like January, April, July, and October, where you'll see $373. The other months stay close behind with regular payouts of $321 to $332, which keeps your momentum going strong. Then we move into week 3, where returns stay healthy, averaging $196 to $432 per week. January, April, July, and October all clock in at $432. In February, May, August, and November, the weekly payout holds at $300. For the lighter months, March, June, September, and December, it comes in at $196, which still adds up to a meaningful contribution. Finally, week 4 rolls things out with a range of $245 to $387. That top number, $387, hits in January, April, July, and October, thanks to some of the highest yielding stocks in the lineup. In the mid-market months, March, June, September, December, it's $357, and in the softer months like February, May, August, and November, the week closes out at $245. What makes this even more powerful is how easy it scales. Reinvest those dividends automatically or add to the portfolio when possible, and that income starts to grow. Slowly at first, but over time, it compounds. So what does that all add up to? Over a full year, you're seeing weekly income between $1,162 and $1,521 per month, depending on the cycle. That breaks down to a weekly paycheck of around $290 to $380 showing up in your account like clockwork. If you're wondering about annual cash flow, here's what that should look like. It provides a clear breakdown of your monthly returns, showing how your investment generates a steady and predictable flow of income throughout the year. Want to know how to turn a $10,000 investment into a $3.5 million portfolio using ETFs? Click the video on the screen to find out.